What's up guys, Adrian here and welcome to episode 11 of my monthly series where I present to you my top 3 dividend stock picks of the month. If you're new to the channel, welcome. In terms of investing, this channel focuses on a long-term buy and hold dividend strategy, the primary objective of which is to generate consistent passive income via dividends forever. So this strategy enabled my wife and I to become financially independent in our mid-30s, so if we can do it, so can you. So January was a pretty stable month for the stock market in general. There was a little dip on the 27th, but a recovery on the 28th and another dip on the 29th, but nothing crazy. Expect more headlines next month, however, because it's quarterly results time when companies will announce their fourth quarter results for 2020. So a lot of media attention this month was really on the GameStop stock. A similar event also happened to other stocks like AMC and BlackBerry. So I don't want to spend too much time on this, but I figure I'll try to explain it briefly in case you haven't heard about it or don't really understand what happened, and give you my thoughts about it as well. So what the heck happened? Why did the stock price for GameStop suddenly rise exponentially for no apparent reason? Well, in summary, this was a classic short squeeze. So when a stock is shorted heavily, it means that many people are betting, keyword betting, that the stock price will go down. So quick example, if a share price of a company is $10, let's say, and you think it will go down for whatever reason, you can call your broker, tell them, hey, sell 10,000 shares of that company for me, hold the money for me, and in 4 weeks or whatever amount of time, I'll give you back the 10,000 shares. So when you do give back the 10,000 shares, they will give you the proceeds of the transaction, which is $100,000, right? 10,000 times $10. This, of course, costs some broker fees to do, and the longer you take to give those shares back, the bigger the fee. So if the stock goes down to $5, let's say you were right, you literally made a 50% profit, right? Because buying 10,000 shares at $5 to give back to your broker costs much less than buying them at $10 a share. So you made a 50% profit minus the broker fee that the broker charged you. Pretty good, right? So what happened to GameStop was that many institutions or fund managers were all shorting the stock or betting that it would go down, which is not really hard to understand why, right? They sell physical video games, discs, which are basically becoming more and more obsolete because you can simply purchase and download video games now online via the Xbox store or the Sony store. So you don't need to buy the physical discs anymore. That's why when you walk into a GameStop store or an EB Game store, which GameStop owns, by the way, half the store is now toys, right? Not video games. Combine that with COVID-19 restrictions and you got a terrible situation for that business. Same thing with AMC, right? They own theaters, so business is they're in big trouble. So a few retail investors or individual investors, people like you and me, banded together on a popular internet forum on Reddit called Wall Street Bets and said, hey, let's buy a crap ton of GameStop shares and call options on them, which are buy options, to essentially bring the supply of floating shares, which is the number of shares available for trading, down significantly. What happened? Well, when it comes to what something costs or what something is worth, it's controlled by really one thing: the law of supply and demand. I learned this in grade 10 economics class in high school, really the only class where I paid attention. I even got a 100% score on the final exam. Sorry, I just had to say it. So according to the law of supply and demand, what drives prices significantly higher? Well, low supply and high demand, right? So this skyrocketed the GameStop stock price, and all those people who were shorting the stock or all those institutions lost millions of dollars, if not billions, while the little guy like me and you made a lot of money. I even heard a story of somebody who invested their life savings of $50,000 in it and made $15 million. So my thoughts and reaction: haha, too bad for you if you lost and good for you if you won. That's what you get when you speculate, guys. Speculation, by the way, just means rumors. So another thing to point out right now is that I'm sure it will change soon because of what happened, but there are no limits to how much a stock can be shorted. More than 100% of GameStop shares were being shorted, so this further amplified the whole situation. So here's the key point I want you guys to understand. Although I find this stuff funny and entertaining, I actually think that it's detrimental to most people, because when they read this kind of stuff, which most likely they don't even understand, they get the very common idea that the stock market is crazy and the stock market is dangerous. So this is really the sad part about all of this. My main message to you guys is this, that this is not investing, that this is speculating or speculation. That's what short-term traders do, just like gambling at the casino. It's fun, it's exciting, and you can win big, but it could also be very dangerous and irresponsible. So stay focused, stay disciplined, and don't listen to the noise, because that's all it is. Why gamble at the casino when you can own a piece of the casino instead? That's what we are. We're owners and investors, not traders and speculators. Completely different. They're always looking to beat the casino. So why try to beat the casino when owning the casino is much better? Because as we all know, the house always wins. By the way, if you like that sort of entertainment like I do, check out the movie The Big Short with Steve Carell. You will definitely enjoy it, as well as the show Billions on HBO, one of my favorite shows on HBO. Okay, so enough of that. Let's get down to business and serious matters now. So the 4 criteria for my stock picks: 1, I own the stock myself because I talk the talk and walk the walk. 2, the stock must provide a steady source of income or a dividend. 3, the dividend must be relatively safe and sustainable. I say relatively because there's no guarantees in life. You could still cross the street with a green light and still get hit by a bus. And number 4, the stock needs to have good value. So if you invest regularly every month like I do, I think you should always try to find what's undervalued, because something always is. So without further ado, here are my stock picks for the month of February 2021. Pick number 1 is the Brookfield Global Infrastructure Securities Income Fund. The stock symbol is BGI.UN. So the dividend payout is quarterly. The annual dividend is 60 cents a share. So BGI.UN is an income fund, guys, that invests in publicly traded global infrastructure companies that own and operate infrastructure assets. So the 1-year stock price and dividend yield, $8.48, which would give you a dividend yield of 7.08%. But the recent stock price in January 28th is $5.86, so a really nice discount, which gives you an incredible dividend yield of over 10% right now at 10.24. So my key points and reasoning for this one, it's really heavily discounted because of the weakness with infrastructure assets thanks to COVID-19, of course. I really like Brookfield. It's a solid, they're solid fund manager. This fund has not had any dividend misses or reductions since the fund's creation back in 2013. It has great regional diversification as well. You could see the breakdown there. It's not only in the US, but there's a lot of Europe in there. You even have a little bit in Asia Pacific and Latin America, which is great. There's a lot of utilities in there. Of course, infrastructure, there's going to be a lot of utilities, which is really a defensive sector. You could see the breakdown there: renewables, electricity generation, electricity transmission, toll roads, pipelines, communications, water, midstream, airports. So anything that has to do with infrastructure, this fund covers. And here's the fund's main objective. This is taken right out of their fact sheet. The investment objectives of the fund are: A, to provide unit holders, which is us, with quarterly cash distributions; B, maximize total return through distributions and capital appreciation. Notice distribution is before capital appreciation. And C, preserve capital. So if you're buying, you want to invest in this stock, don't expect much capital appreciation. Okay, this is an income fund. It's designed for income. So I know what you're going to say. The stock trend is not that great. Well, that's the point, right? The point is you buy and hold it. You're not going to make your money here with capital growth. You're going to make your money here with the dividends by holding it for a long time. Pick number 2 shouldn't surprise you guys. I covered it in my latest video. It's the Horizons Gold Yield ETF. It's a covered call ETF. So the stock symbol is HGY. It's managed by Horizons ETF. The dividend payout is monthly. The annual dividend, 33 cents per share. That's the annual one, but keep in mind that the amounts vary monthly. So this ETF holds the SPDR Gold Mini Shares Trust, which is basically an ETF that holds and that is backed by physical gold. So to generate a nice dividend yield, covered calls are written on up to 33% of that ETF. So the 1-year high stock price for this one is $6.34, which would give you an approximate dividend yield of 5.21%. A little bit discounted now at $5.55, which gives you a dividend yield of almost 6%. On physical gold is very, very good. Very hard to get yield holding physical gold. So my key points and reasoning for this pick: gold prices have pulled back a little bit in the last couple of weeks because of the positive momentum and sentiment of the stock market. So it's a great time to buy gold, in my opinion. Gold, don't forget, is a hedge against future stock market crashes and inflation, and it's this ETF is really one of the only ways, if not the only way, that I've seen to get a really nice dividend yield off physical gold and not have any exposure really to the gold miners or the gold producers. So this ETF is really designed for income, of course, not for growth. A really good buy and hold stock for income-focused investors like us. But you will still participate in share price upside when gold prices go up at 66%. That's simply because covered calls are only written up to a maximum of 33% of the portfolio. So if gold goes up, I'm not saying the ETF will not go up. It will, just not as much. So the monthly dividend does vary, guys, so it's a bit annoying to track the income, but you're looking at a yield of about between 5 and 6%, which is really unheard of when it comes to physical gold. It's a much better option than buying gold bars or gold coins, which make zero income for you, whatsoever, and they're very tricky to store and sell if ever you have to do that. So a really good way to get some gold here. Last pick is a REIT. As usual, I absolutely love REITs, like you guys know. It's the Firm Capital Property Trust REIT. The stock symbol is FCD.UN, or you might have to put FCD-V.UN to find it. That's only simply because it's on the TSX Venture exchange, which is like the TSX's little brother, but still on the Canadian exchange nonetheless. So this is a small cap Canadian REIT listed on the Venture that is very diverse. This is why I like it. It's very diverse in terms of property type. So it has retail, it has office, industrial, but it also has a growing number of residential real estate as well. So this, you shouldn't confuse it with FCR.UN, which is another REIT also managed by Firm Capital. So the 1-year high stock price, is $6.91, which gives you a dividend yield of 7.24. And the recent price, I know it says January 29th, that's a typo, it's the 28th. Stock price is $6.56, which gives you a really nice dividend yield of 7.77%. So my key points and reasoning for this one: it has stellar property diversification, like I already mentioned, with a future focus on more residential properties. It's very similar to the profile RioCan has, but it has a lot more industrial exposure. As you could see from the breakdown on the right, I put it here. You have 22% industrial, which is pretty big, very, very small percentage of office. And the retail, as you could see, is heavily grocery anchored real estate, which is very safe because grocery stores are obviously essential services. So this has, here's the strong point for this REIT. It has an amazing dividend increase history. This REIT increased their dividend 8 years in a row, and it's now at 51 cents annually, so including 2021. So it's a very attractive dividend yield of over 7%, and it's really a growth oriented REIT. So it's great for long-term buy and hold and investors like us, but it's also a great source of consistent income. Also, I just want to mention the payout ratio for the latest quarter, Q3, was 90%. So they really have no problem paying out the current dividend as well. So a really cool small REIT here, really a long-term buy and hold play. And if history shows us the way, well, it will keep increasing, hopefully, their dividend. So it's only a matter of time where your dividend yield will go up and up and up. So might as well hold it for the long term and collect the sweet dividends along the way. Please visit our website, passiveincomeinvesting.ca, to access my brand new digital product that I'm very proud of, the Ultimate Dividend Passive Income Investing Package, which includes a huge list of ETFs, split funds, income funds, high yielding single stocks, and REITs, along with my personal comments for each one. Really all the stocks you will ever need to build your own income focused portfolio. Also keep in mind that if you purchase the product now and I come out with an updated copy later on, you will get it for free. You won't have to buy it again, so don't worry. So there are also other free tools on the website. I strongly suggest you check them out to really help you on your investing journey, like a budget tracker, a blank copy of my portfolio, so you could use it as a template to track your own investment, and of course an updated copy of my entire portfolio and other useful links. So you can also book a one-on-one consultation with me, a video call there, if ever you want me to review your existing portfolio, help you build a new portfolio, answer all your questions. Whatever your needs are, I will do my utmost to help you and answer all your questions. I've done dozens of video sessions already, and they seem to be very, very helpful for you guys. So I love doing it as well. I mean, nothing gives me more pleasure than helping fellow Canadians to make passive income. It's really a beautiful thing. And as always, please support me and this channel by hitting the like button. It's free for you and it helps the channel out, so it's a win-win. Finally, make sure you're subscribed so you don't miss out on my future content and community posts on passive income investing, which is all designed to really help you on your investing journey. We're also on Instagram, by the way, so if you use it, follow us there as well. My mission remains the same, guys. It's to help everyday working Canadians in order to invest on their own and build their own stream of passive income to enhance their quality of life. So with that, take care, guys. Stay safe and see you next time.